Everybody, welcome to Nate's Pop-Up Podcast. I'm Nate. Today, I am sitting down with Melissa Withers of RevUp Capital, VC firm here in Boston. Rather than me make the introduction and tell you what Melissa does, Melissa, tell us a little bit first about RevUp, what the company is doing, what the company is all about.
Yeah, sure. I talk with my hands, so just watch out. This microphone's going to see some good times. I've been working as a professional investor for about a decade. I actually started my career here in Cambridge. I was in life sciences. I spent 6 incredible years at the Whitehead Institute for Biomedical Research at a very magical time. I worked on the Human Genome Project, some amazing stuff, and then kind of backed my way into early stage investing after doing a few other things. I started a company myself, and then I had some time in a public sector sabbatical where I was doing some public service. And then many years ago, worked my way into professional investing, mostly because I sucked at another job. So I had left my startup to take a position working as the director of media for a newly elected mayor, thinking I was going to change the world through government. And it lasted 10 months and 11 days. And at the end of that 10 months, it was very obvious that one of us had to go, and it wasn't going to be the mayor. And so there was this, there was this moment that I just had, things had to change. And it was at that time that I hooked up with my current fund partner and joined him. And I was really only going to stay for 3 months, just a little air cover while things blew over. And fast forward like a year later, I was the managing director of that fund and found that this was like my calling, and I was pretty good at it. So I started out with a really traditional early stage equity fund. My partners and I did about 90 companies through that model. And then in 2016, I began realizing that the toolkit that we had for funding early stage companies was very limited. The tools of venture capital proper, really there's only one tool, right, which is equity. And the way that you make money in equity investing is you sell a company. I mean, you can IPO, but that doesn't really happen anymore. And I found myself dissatisfied with the limitations of that, right? Betting into the exit is problematic in a couple different ways, but really what was happening is I was saying no to a lot of companies that I could see becoming $20, $30 million companies. But if you want a venture capital win, you have to add a zero. Mm-hmm. And that I saw a huge opportunity not only to invest in the kinds of companies and founders that I would be proud to support, there was just like a metric shit ton of money to be made over there as well. It was an underserved asset class that was very deserving of private capital and saw an opportunity to design a model that would work for those companies. So fast forward, been doing that now since 2016. We've got about 70 companies in the portfolio.
Now we're talking RevUp now.
RevUp, yeah. Okay. And we just designed a model that allows us to invest into companies kind of independent from the exit. So we're really looking at revenue growth versus exits as the way to create investor returns. Just gives us a lot of flexibility to invest in a very broad spectrum of companies, mostly B2B.
So let's go back a little bit, because you said something interesting there, and it's that your startup journey, we'll call it that. You actually started up your own before you got into private equity, and before it was you or the mayor, someone needed to go.
Yeah.
Before that, you had your own startup.
Yeah, I did have a company. Yeah.
Was that in the biospace?
Nope. I did have an opportunity when I was at MIT. It was a really special time. That was like the second generation of biotech companies. And a lot of us were just like moonlighting and working with these. It's probably the reason I don't invest in biotech is because I know too much, right? I just know how hard it is to commercialize these products. When I left MIT, for personal reasons, I just needed to move on. And I got my graduate degree here in Boston, and it was just the time to move things around a little bit. I ended up taking a job working in economic development, and that's where I met my co-founder. And he and I spun out a company together. It was really exciting. It was sort of in the business model innovation space. He still runs it. I just exited that company to him when I did something else. But it did help. I do tend to gravitate towards founding teams that are strong operators, and it just reflects my own bias because that's what I was, right? So it doesn't mean that everyone has to be a strong operator. You can have visionary leaders who can find good operators. I tend to bias towards strong operating teams because it kind of tracks to my own personal experience and what I value in terms of what it takes to build a business.
So let's go back to the mayor thing. That just got my attention. So you had this startup.
That's a 100% true story. He's no longer the mayor, but we're friends. Yeah, I just want to put out there we're friends. Wherever you are, my guy. Hey,
so let's do so you exit the startup, the biospace.
Everyone told me not
to.
to take this job with the mayor. My current partner sat across from me while I ate a bagel and like unilaterally declared that this was a terrible idea and that I should not take this job. And I did not take his advice. It's first of many times that I would go on to not take that man's advice and live to regret it. So yeah.
So, okay, you exit the startup.
Yep.
How did you wind up working how did you wind up with the mayor's job?
Well, so my whole history in my career has not really been I'm a generalist, right? And I'm really interested in entrepreneurship and innovation. And I don't really care like categorically, whether you're in a startup, whether you're in a government agency, whether you're, it doesn't matter. I think what has always attracted me through all the roles that I've had was the sort of threads of innovation entrepreneurship. So when I started my career, I also was a failed scientist, had a lot of failures. So I wanted to be a scientist. As it turns out, I was really terrible at doing bench work, right? It's very precise. And as a metaphor, I'll tell you that I'm a really good cook, but I can't bake. Because when you cook, you can taste as you go. You can, with baking, right? You just have to measure carefully and let it, right? Like I'm a good cook, but I can't bake. And so while I wasn't good at bench science, I was very facile with the language of science and the narratives of science and could understand the science and ended up getting a graduate degree in Boston in science and technical communications, which allowed me to move away from bench science and into the translation of science for audiences who needed to understand, but maybe didn't have the scientific background to understand it the way it comes out of a scientist's mouth, right? And so all of that kind of, when I focused me on how do you take ideas and put them into action, right? So it really comes back to this sort of my take on entrepreneurship. It's not really, I don't care if you're in tech. I don't care if what matters is you're trying to put ideas into action, and having strong narrative skills to do that was sort of how I got pulled into those places. But this was at a time when generalists were kind of the norm. I think we've gone through 2 decades of loving specialists, but I'm a generalist, not a specialist. Yeah.
So coming off of, all right, you were the mayor, someone.
Oh yeah. You asked me, how did I get that gig?
Oh yeah.
He felt that he needed someone who could build a new story, a new narrative for the future of the city that he was now going to lead. And he thought that my generalist experience with, sort of narrative development, entrepreneurship, early stage companies, he saw that as additive and thought that I'd be a good addition to his cabinet. And I was, except that the rules of politics, the way politics is played, particularly at the mayoral level, I just was really an entrepreneur, not a politician. And so I just didn't have I wasn't motivated by the same incentives. Everyone I was working with just really wanted to go up the ladder in politics. To me, I just wanted to do a good job and make my city a better place, right? And I was terrible. I was really terrible. I would have fired me too. I was really, really terrible at the core job, which was to, create political environments where the mayor could be successful at advancing his agenda. And I wasn't good at that. So I deserve to be fired. It was not a good match, but we're cool.
Oh, hit the bricks.
Yeah, it was at first biggest failure of my life. I mean, it was actually very devastating. It was very challenging. I was working, 30 hours a day. And it sucks.
30 hours a day?
Yeah.
Wow, that's something.
Yeah, exactly. And I really had high hopes that I was going to be able to make a meaningful impact on his time as mayor and also in my city. And it was actually, it was really painful, but like many failures, right? You come out the other side and just grateful that I actually didn't stick around there longer, right? Because in some ways that everything worked out. Yeah.
Well, the fact that you were working 30-hour days on a 24-hour day, you must have had a time machine back there or something.
It's literally what it felt
like. It's
impressive.
Yeah.
I know.
So coming off of that, now you're coming off of your job at the mayor's office. That's when you began RevUp Capital.
Nope. Prior to that, my partners were running another fund. This was a more traditional early stage equity fund. Okay. We didn't move away from that. We did 89 companies through that model, and it wasn't until 2016 that we created RevUp and designed the new model and moved forward.
So just to kind of speak a little bit about RevUp, because it is the one thing about RevUp is, as you said, versus other VC models. I'm not aware of another VC that does it the same way you do.
Yeah,
it's different.
There are tons of them.
There are there really?
Yeah. Okay. I wish I could. It's actually that it's a. We are not alone. I have good colleagues who run funds that have similarities to mine. Revenue-based funding has been used in later stage organizations for literally a long time. I mean, decades and decades. I mean, think about it. Go back, like, I'll help you build the oven and then you just give me some bread, right? It's fundamentally a concept that's it's more old than venture capital, which is actually a relatively new concept. No, there are actually but they vary, right? The asset class is very diverse. So there are revenue-based funds that look more like banks. They look more like loans. It's a really big category. And I think people use the word very loosely and it can mean very different things. Mm-hmm. We are unique in, I think, one important way, which is that we aren't bank-like, high throughput or transactional. So some of the funds that do what we do are not, like, we look like a boutique equity fund that just has the flexibility to use a few different models to make our investments. Mm-hmm. A lot of the revenue-based funders are more transactional. Like, you fill out an online application and 3 days later they tell you, and they have like bank-like terms, right? But there are other funds, many of them, I've helped them build these funds. I'm passionate about expanding the toolkit, not about being the only one that has it, right? I like running a small fund. You need a lot more of me if you want to make an impact in the world. So it's really very quickly in the last decade, it's the fastest growing form of funding for early stage companies.
Oh, wow. Okay. Yeah. I kind of figured, because you're right. Yeah. It's with the typical VC, if you're not a moonshot. Oh, hey, yeah, you got a great idea.
And I love VC. I say all the time,
in 5 years. You're moving on.
I angel invest in things that would never work for my model. I sit on other I think traditional venture capital has a very important role to play. There's also a really significant difference between, we use venture capital to describe all early stage investing. It's a huge difference between raising $1 million on a safe note from a bunch of angels and taking $1 million from someone who's going to become a preferred stockholder and sit on your board. But we call all of that venture capital. I think it would be better if we started talking about venture capital as everything that was more institutional and gave early stage equity focused, really understood the difference. Right? It really, really is different when you raise from angels and small institutionals than when you do a price round with they're apples and oranges, right? And so I think part of it is that we don't have good language to talk about the capital toolkit because we've been so myopically obsessed on the really sexy headline stories, right? Which do tend to gravitate. But my son was very ill a few years ago and his life was saved by medical technology that would have only been possible with high risk, high reward venture capital, right? You want rockets, you want robots, you want big swing for the fences type stuff. That's a place where venture capital has an incredible role to play. Defense technologies, whatever it is. It's just that unfortunately we lived in an environment where over the last decade, the narrative and tools of venture capital just dominated all conversations. We kind of lost the thread on how much of American entrepreneurship is not driven by the unicorn hunting and how many companies are big and valuable, but might become $50 million companies, which by definition aren't really good candidates for institutional VC. I think I told you, I use the stat all the time. If you look at the Inc. 5000 list on any year since they've been publishing it, never more than 5% of those companies are venture funded. Just means that 95% of the fastest growing companies in North America are not using venture funding. But in rooms like the ones that we're in, that's what we talk about because they make better headlines. Instead, it's company makes payroll again versus so-and-so raises $200 billion, right? I get it, right? My companies do really important things. I'm really proud of them. I'm proud of those founders. But
company makes payroll.
Company makes payroll again. TechCrunch, front page. It's right.
I could see someone taking the stage and getting on the mic next week at TechCrunch saying that one.
You're like software company makes customers happy. Right? Helps customers make money, right? It's just those don't make good headlines. I get it. So you end up kind of talking about that outlier stuff, but it's subtle. But over time, you realize that it takes the air out of the room, right? So I spent a lot of time traveling our portfolios all over the U.S. And every time I have a microphone in front of my face, I just think the message isn't VC is bad. The message is if we want to unlock the full potential of American entrepreneurship, then we need to expand the toolkit. So that more founders and more companies can find success. That's critical, not only to our economic well-being, but to our national security, to everything, right? If you want the products and services the world wants and needs, then you're not going to get it through VC funding alone. But it's hard to break those patterns, right? They're pretty entrenched.
Yeah, they are. You're right.
Yeah.
So having been with RevUp, for I want to say 8 years. RevUp's been around for
it's like anything. So we are I'm a founder first and foremost. When I started RevUp, the first thing I raised a $600,000 fund, the same way you would it was my MVP. right?
So this is because
right.
this is your startup story for
when we started, right? Like I didn't go out and try to raise, of course I couldn't. I mean, most of your ability to raise money is tied to who knows you, how wealthy are you, how wealthy are your friends, right? And I was the first person in my family to graduate college. I didn't have personal wealth, but I had some people who trusted me. My partners were extremely instrumental in this. I mean, really, without them, this never would have been possible. And they raised that first $600,000, and then together, we put it to work and realized it worked. And then over the subsequent years, every annual fund just got bigger. So by contrast, my last annual fund was $8.5 million, right? But we didn't start there, right? Like we were founders first and foremost. Not all investors were founders, I think. And again, you don't have to be. I think you'd be a very good investor and not having been a founder. Mm-hmm. I think it doesn't hurt if you have founder experience, because you really do understand that you have to have that iterative interaction with the market before you double down on everything. Wow. Because we all know when you build companies, doubling down on everything before you've had iterative contact with the market is a recipe for disaster, right?
So let me ask you this, because you've seen as many pitches as you have.
So many pitches.
So many pitches.
I mean, infinite numbers, probably more pitches than almost anyone.
So now that, with that said, what I always like to ask this of, people who are in the investment space, what's your biggest pet peeve? What's your biggest red light where it's like, nope.
There's a lot. And I think the most important thing is that a founder needs to know who they're pitching to, right? Because my biggest pet peeve is when a founder makes a pitch and it's clear that they don't know who they're pitching to. Right. So I volunteer and mentor a lot. So I was the entrepreneur in residence at Techstars Boston for a few years. Like all I do is look at pitches. Right. I think a big pet peeve or red flag is when there's a disconnect, there's an inauthenticity to a pitch where the person delivering the pitch, it's just not connecting. Like it's clear that they don't even understand their pitch, right? But the pitch has been kind of this Frankensteinian creation that they've taken all this feedback, right? And gotten a lot of investor feedback, investors that were never going to write them a check. Mm-hmm. And everything's really great. And then they get to this slide where they talk about going from, idea and that they're going to have like $30 million in revenue in 3 years. Like I feel badly for those entrepreneurs because I can tell that someone made them say that because they were trying to form themselves into something that would look venture scale. So I'm sensitive to that. That's not really a pet peeve. I just oftentimes will give founders a chance. I'll just acknowledge that and be like, did someone tell you to say that? Or do you really think that? Because we can just take that down a notch. Mm-hmm. I think pitching is a really interesting thing because you have to have a good story, but the honest answer is the story changes frequently, right? So I think more about helping founders recognize that your story is the skin of your company, and without it, you're just a bag of bones. And I think sometimes we don't think about the story until we want to fundraise. You really should be thinking about your story the whole time because the story needs to not just try to sell investors. The pitch needs to sort of help me understand your operating roadmap, right? Mm-hmm. It's got to help me understand how you see the world. So I think when I see a pitch that's just been sort of put together like in a cookie cutter way with the express purpose of, trying to sell me that you are the next unicorn, I often find myself wanting more, like feeling a little bit like you just left out the special part, the part that makes you different than everyone else. I really don't take pitches too seriously because I understand the pressure that entrepreneurs are on to tell stories in different ways and the advice they get. I think a lot more about what happens when we get into a conversation, right? Like, because sometimes founders don't make a great pitch, but there's still a good company in there, mm-hmm. right? So I think dependency on the pitch is a bit glib. Like there's like you have to have a good pitch, quick elevator pitch. If you're going to get up on stage, you want to have a good story. I think less is more, right? Because it's really what matters when you get in the meeting. Yeah. So don't give me reasons to object. Just give me reasons to take a meeting. But that's all stuff that you can Google your way to victory on that.
So that's the red light. What is it that you hear that is just like, oh yeah, I'm on board with this? What do you think is one or two green lights where, not to give away the house or give the big reveal, but if there's a green
you do is read
light, something that
you're an idiot if you don't read my website and make your pitch. Of course, there's no secrets here. Again, what I see as a green light could be like, if you're talking to one of my friends who runs a traditional venture fund, they're going to look for different things. So if you're pitching to a venture fund because you think you're a unicorn, don't take this advice per se, right? Because it really depends on the funder, right? I think green lights for me kind of are the strength of the team, right? It is very difficult today to build a business without a team. And I feel terrible. Like it's really hard for solo founders. And it's like, I can't invest in a solo founder anymore because every single time something bad happens, like the data and the evidence is just stacked against these poor souls. So it's really tricky. If you're a solo founder, you have to find ways to build core C-suite survivability around you, right? Even if no one has co-founder status, you really need to put in the work to find a way to get yourself out of that solo founder status, because it is that's like a real red flag, right? Because if you're a single point of failure and it's already so risky, you've just added an almost insurmountable single point of failure. But I think on the other side of that, when I look at, like well-formed teams. And even if some people are part-time or advisory, just really thoughtfully constructed teams. I know from building businesses that you've got to have a lot of diversity in the C-suite. You have to have different points of view. You need to have the right tools. And the hardest part to scaling a company at all is many people that haven't had experience building, they underestimate how hard it is to build a good team when you are also resource constrained. So we look for people who have some demonstrable way to show that they know how to build a team. Right. If they haven't hired anybody, if it's been like a revolving door, that's not great. But if they have a good stable core of a couple folks and they've got a good articulation of maybe what they need, but maybe they can't afford it, right? Like looking for people that really have maybe built teams before, even if they did it in an enterprise organization, right? Had managerial experience, like built teams. That's really important. And I think a really simple thing today that people are overlooking is if you are in any kind of company that needs to operate, if you don't have a story for how you're using AI to create operational efficiency, to me, that's a green flag, red flag. Like if I ask a company, how are you using AI within the company? And I'm not asking like, how are you using it in a transcendent way? How are you using AI today, every day, and in what ways to allow you to operate more effectively? If there's no answer, like that's a door slam moment for me.
So that's
because you're already done.
That's a
you're already done. There's somebody out there that's already doing it. Like you're going to get beat. You're going to get beat like tomorrow. Right. Now you can have a little bit and have a plan. Like you're like, we want to do these 3 things and we're working on, these are early stage companies, but I'm telling you, like shocked to see the number of companies that are still not even using the tools that I'm using. And I'm like a dinosaur.
Wow.
Yeah.
So having given a little bit of, advice, for lack of a better term, as far as what you think is a green light or a red light for a pitch, as far as RevUp goes, if you could just give a little bit of the thesis. Like I know for instance, and this is based on the website. So, this is nothing, that isn't already known.
There's no secrets.
You're looking for companies that are like 1 to 10 ARR, or you're looking for one and looking
1 to 3. Yeah,
okay.
1 to 3.
So that's in any particular niches or industries.
About 80%. Yeah, about 80% B2B. Consumer is really challenging, and you have to get pretty far along with those margins before any revenue-based funding kind of makes sense, right? You can't take money that doesn't exist. So mostly B2B. We have concentrations in enterprise software, health tech. I personally love fintech. I have a Boston company here, that's a fintech company. Tech-enabled services is I'm really dig tech-enabled services. More than just revenue, though, because you can have $1 million in revenue, but if you've been stuck there for 3 years, right, we don't remediate. We're not like a turnaround. So companies that have a decent growth rate, potential, I think that they have the raw materials to build the kind of operating infrastructure that they'll need to get up the curve. It's like 4% of companies get to $1 million in revenue, and like 0.4 get to $10 million in revenue. And we've specifically optimized our platform to support companies on that $1 to $10 million journey. It's really, really hard because like all the stuff that gets you to your first million, like a lot of it actually blocks you from getting to 10, right? Founder-led everything, personality-driven everything, customizing everything for each customer. While you can't like throw the baby out with the bathwater, you do have to find ways to sort of systematize and put in processes that in order to allow you to actually scale. So we optimize around that. So we're looking for companies that are at that inflection point. And we're a small fund. I mean, we only make maybe 10, 15 investments a year. I have to look at, we got to get along, man. Like we got to get along. And I have to believe I'm going to add value. Right. And you have to believe it too. And I think, that's true for most early stage investing. There is a lot of vibe involved, right? And I would say the same advice to founders, if you don't like your investor on day 1, probably not going to like them on day 900, right? Like
I always say, definitely not going to like them when there's a problem.
You got to kind of like start in love so you can like make your way down to like, right? So, we do look at team a lot. When we do diligence on a company, really understanding the team is a huge part of what we look at. Understanding the capital strategy, future capital needs. We are investing into companies whose downstream survival is not predicated on future funding, right? Doesn't mean that, many of our companies, most go on to raise, either institutional seed or Series A because they can and they want to, but not because they have to. So, for example, we don't invest into highly regulated spaces or things that require future R&D, right? Because they're just not good candidates for the tool. It's not because I don't like them; they're just not good candidates for the tool.
Oh, but it sounds like it's more, something with
that's
R&D.
a place where equity
VC.
makes a lot of sense. Yeah. And we're almost always investing alongside other capital. So
Cool.
Never the only money in a company, very rarely.
Well, you've been doing this long enough. What has been your biggest success? And, it doesn't mean it needs to be, it was the one that made us $1 bazillion. Maybe it was more, where you were able to move somebody from 0 to 1, or there was some kind of story behind it, whatever the case may be.
I'm going to answer it two ways. I'm going to answer it one at kind of a meta level, and then there's like two examples of things that I still like very contemporary and very meaningful to me. I think at the meta level, I really wanted to prove the point that you could design tools to invest in early stage companies that were good for founders and investors alike, right? And I really wanted to develop a strong proof point that the only limits in investing are the ones we set ourselves. And I feel that now, having deployed into this many companies and produced such good results for our investors and such good results for our founders, I'm just at a macro level very pleased that it worked. Because we remember this all started because I sucked at one job, and I was a bad scientist and I sucked at that job. So at a macro level, great success was just making an indisputable proof point that we need to invest more time and energy in innovating the toolkit, right? Like venture capitalists have had 20 years, and the only thing we came up with is safe note, right? We need to innovate more, right? We need to innovate with the same passion as we expect our founders to innovate. And so I'm very pleased. Also, I love the founders we invest into. We have, we invest into hardworking founders that are like not always in top tier markets, right? People that might be the first in their families, to take the leap. About 70% of our companies are C-suite diverse. They outperform their non-diverse peers. We're not a gender or a race or a geography-based fund, but we invest in places and spaces where entrepreneurship really makes a big difference in the world. Just published an impact report on that. I'm really pleased with that. I'm also pleased that I made money, right? It's really hard to make money as a fund manager. People don't really understand fund management, but there's a reason why most people who run funds are independently wealthy, right? Because I have to give all the money back to the investors and then wait and hope that there's something left for me, right? But so this was also economically productive for me. We developed a model that made money for the investors, made money for the founders, and made money for us, the managers. So that was great. On a personal level, there's been a few moments where it's kind of like a good fuck you moment, like to the world, right? I had a company that had an exit a couple of years ago, and the founders was a life-changing event for them. And it was a small exit, but to them, it was a couple $1 million. And founder, bought his mom a house and really changed his trajectory. At another company that was a really exciting company, but the founders were just not like vibing with venture capital, and they got just so dicked around. And 2 years ago, they sold their company for $300 million in an all-cash transaction to the London Stock Exchange Group. And in that day on that transaction, more than 25 people became millionaires inside that company. And now those founders are investors in my fund.
That's awesome.
So that was a good middle finger to the doubters, to the haters.
Take that, haters.
Yeah, take that.
So what I want to do is, and this is what I do with all of my guests, there are two things I like to do, and it's more to the community than anything else. I like to ask what it is that you could do for the community, and then in turn, what could the community do for you?
Yeah, sure.
If you're talking to people right now, if you had an issue or problem or anything like that, where you could just hit the magic button and be like, boop, solve the problem.
I have I do open office hours every Friday, have for the last 6 years. I think one thing that I can do and often do is I'm a good translational layer between everything, right? So I ran a VC fund. I know those people. We raise money from those people, but I also know what they're not saying. Like I can read between the lines. Also, having been an operator and now running a fund that focuses more on operating acumen rather than fundraising skill, I like kind of live in the middle of these worlds, and I love them all. Like I'm not jaded or bitter or hate any of it. I'm kind of chimeric. I can be whatever you want me to be. And I have the benefit, I think, of rolling with a lot of different communities. And it allows me to really stay contemporary. But sometimes with founders, if you can ask the same question to 3 different people and you might get 3 wrong answers, right? And I think it's sometimes a founder just needs to get someone to help them translate, like, what does this sentence really mean? Like, this investor said this. And very many times what they say it's not really what they said. There's like something else, right? So I do still carve out, it's getting harder. I don't have as much time, but I carve out a couple hours every Friday to talk to first-time founders about, their capital strategy, their fundraising strategy, their business building strategy, where they're never going to be able to, like, they're way too early for us. But I still enjoy doing that. And word on the street is it's useful. So
let's get into that a little bit. So you're doing office hours for founders on Fridays. Where? Oh,
they're always virtual.
Oh, okay.
Yeah.
All right.
I mean, I've done them here, I travel, I'm on the road all the time. I work out of airport lounges. I really do. I travel a lot.
So if someone's watching this right now, someone's like, and when you're talking founder, I guess you like earlier than you. So
I'm just
maybe just an idea.
It doesn't matter. It's just, I have a place for, if I believe I can be even remotely helpful, I have time set aside every month. It may be a few months out that it takes to book, but I'm always happy to do that.
How would they be able to access that? How would they be able to get on your schedule?
Send me an email to Melissa@revupfund.com and I will send you a calendar link.
That is Melissa.
Am the easiest person to find. It's like I am not a secret. Yeah, you can find me. My phone number is like published. Like, I'm like, you can find me. I might not answer you, but no. Like you can connect on me with LinkedIn without having to put in an email. I enjoy people. I enjoy helping. So if I can't help you, I will let you know.
So if someone reaches out, that's all it's going to take to get some time booked on with you.
Yeah, unless it's something so far afield from what I do, I'm not going to waste your time or mine. So if it's something that really has no resonance and I just think like, this is the dumbest, stupidest thing and I hate it, or I don't do that, then I might say, sorry, I can't help you. But that's not that. It doesn't happen very often.
Well, if you're watching this and you want to speak with a seasoned VC who might be able to answer some questions for you.
It's a nice way of telling everyone how old I am. Seasoned like a leather handbag. Aging like a fine wine.
Oh, no. Email, is it Melissa?
It's Melissa at revupfund.com.
At RevUp, which is MELISSA, pretty much spell it like you think it would be, at RevUp, REVUP.
Fund.com.
Oh, so it's RevUp Fund.
Yeah.
Okay.
Well, you can also find me on LinkedIn. Fund. Like I'm easiest person. And actually, and if you're watching this and you're in Boston, like you throw a rock and someone's going at my contact information just because I've been hanging out for a really long time.
Well, you do that, get her on LinkedIn. If you're watching this on whatever social media channel and you want to drop a comment in here, I'll get you in touch with her and play it that way.
Exactly.
One way or another.
That's the other way to do it is ask you. And I hereby in front of everyone give you permission to share my email address with anyone who wants it.
There you go. Was there anything that the community could do for you? I think, with respect to RevUp, I believe you're raising the next, you're looking for LPs right now for the next fund.
I'm still deploying. We're all I think always love to meet companies that might be a fit, right? So we have good deal flow. We've been around for a while, but sometimes the best companies are the ones you didn't know, come from nowhere. We still get random companies that come through our top of funnel and we write the check. A lot of our companies do come through referral. Investing is kind of inside baseball, but yeah. So, I think I love funding local companies and we're geo-agnostic. We have companies all across the US, but we do have, probably 20% of our companies are in the Northeast. So that's always looking to find great founders and it's we're farming, not hunting, right? I met a company when they were at Techstars Boston 3 years ago and I didn't invest until last year, right? So it's playing a long game, right? So those kinds of relationships, that's really helpful.
Awesome. So with that, we're coming up on about 30 minutes here. So this is where we begin to wrap it up. Melissa, thank you very much for appearing.
Cheers.
And we will see you on the next one. Thank you very much for watching.
Thanks for having me.
Hey, everybody. Welcome to the overtime session of Nate's Pop-Up Podcast. I am here with Melissa Withers of RevUp Capital. And this is the part of the show where we ask something a little more personal about the people we are talking, who we're sitting down with. Melissa is you said seasoned, but
no, Now it's in your mind.
Yeah, now it's in your head. A seasoned boxer who has a title belt, if I'm not mistaken.
I do. Yeah.
I want to hear about this.
So I'm actually not really, by boxing standards, I'm not really seasoned. So I've only been boxing for about 4 years. So in boxing standards, that's not really seasoned. But I had my first title match in Atlantic City.
In Atlantic City?
Wait for it. At the Showboat Casino and Lounge.
Wait a minute.
Yeah, it's amazing.
Wait a minute.
It's amazing. It was an amazing experience. And then I also lost a title match at the Showboat Casino and Lounge in Atlantic City not that long ago. So, yeah.
Oh, wow. Okay, we got a lot to unpack with this. So you started 4 years ago. Had you ever boxed?
No, actually, and I'm a total like pancake inside. Like I'm really violence averse. Like I block my eyes and ears during movies where there's a lot of fighting. I don't watch MMA even to this day. I do watch a lot of boxing. I took up boxing really as I'm really athletic. Like I love to do things. And I cycle through things. It's like for me, physical activity is a way to like leave work behind. And I used to do distance running, and then I finished the Boston Marathon after running the Chicago Marathon, Philly Marathon. And when I crossed the finish line in Boston, and I raised, lots of money for Europe Boston, which is a charity that's really close to my heart. I knew marathoning was over. And I also needed something where I wasn't alone in my head so much. And so some friends of mine, there's a world champion boxer, Jamie the Hurricane Clampett, based out of a gym called On the Ropes in Warwick, Rhode Island. And some of my friends were boxing there. And I thought, okay, this is like a great workout. And as you get older, we talked, I'm seasoned. You got to do things that work for your body. And boxing is an amazing workout and super fun. And it just sort of progressed, right? So first you do the training, and then the next thing you know, you're like shadow boxing, and then, it's like a cult. And the next thing you know, you're sparring. And then the next thing you know, your coach has you signed up for a title match in Atlantic City. That is actually just how it, but I've never hit anyone outside the boxing ring. Like I'm not like people always like joke like, oh, don't mess with her, she'll punch you. I will run away. I will not punch you. Like that is not what I do. But yeah, boxing, I also, boxing is a way to meet people that I can't meet in entrepreneurship. So for example, one of my coaches is the deputy warden at the Rhode Island State Department of Corrections, right? And I've learned a lot from her as a human, as a coach. And that's a person I would not have met right here or doing the regular things that we do. So it's also, boxing's just a very, why like everyone boxes, right? And when you go to matches and you work with your team, you just have contact with a lot of different kinds of people. And for me, kind of from where I came from, it's just a way to stay connected to people that are important to me that I don't encounter in my work anymore. Like, not fancy people sometimes. And then other really fancy people box, but really special people and that kind of training. And when you get in the boxing ring, you can't think about whether or not you signed the term sheet, because that bell goes off and someone's coming at you. For 90 seconds, you are not thinking about anything other than not dying. And so it's also kind of therapeutic. My brain's very active. My brain is like my mouth, and it's hard to shut it down or keep it quiet. And so boxing, I can tell you when I'm working in boxing, I'm not thinking about your company or about how much money I'm going to give you or about whether or not an LP wrote me a check. I'm just trying not to get knocked out.
And with that,
we
bring the overtime session to an end.
Yeah.
Thank you.
Yeah. Thanks for asking about it.
Give you another.
Ching, ching, ching.
It's like, thanks everybody. See you next time.